Hello and welcome everyone again to the CRM Digital Summit. And as we began the day with peeling the onion around fundamental differences of AI CRM, and few weeks back at Knowledge event, we launched autonomous CRM at ServiceNow. This is a very, very important conversation with an industry thought leader where we will correlate what we said in the beginning of this session, that with AI, CRM as a subject is foundationally different. And we actually spoke about 5 layers of that difference. Firstly, the system of record, the new system of record being very thin, which AI can read and reason. It's semantic in nature. The business context, what makes companies win, what makes companies work with their ICPs, what stands out when they actually do those winning motions. Where does that knowledge lie in this context is actually in knowledge graphs. What acts as brain is almost like a multi-agent orchestration platform. And the context of team itself has become hybrid with physical workers as well as digital workers. And most of execution is happening with the conversation interface. We also earlier launched in Knowledge a conversation interface called ServiceNow Auto. And as we relate with all these 5 layers into banking and financial services world, an industry which is always technology first in its execution, but has by history was for formalization of economies. And as they began in banking, they began with formalization of economy, a saving account and a current account, and then products got added. And as products of cards and lending and what have you got added, there were different systems for that, different organizations. So BFSI companies have been product-centric organizations wanting to unify their experience for their customer, which should be always customer-centric. In this context, let me welcome on stage Nishant Singh, a thought leader, an industry veteran, an entrepreneur who built a CRM company called Business Next, in last 15 years has pivoted to really contextualize what is the architecture of today, as we are actually making the software not just for people, but for amplifying humans and the software to be used by software in an agentic and an autonomous world. Welcome, Nishant. Thank you for joining this conversation. And we will, try to correlate the concepts that I just spoke about and we covered in the earlier session. As you have been actually on the driving seat of not just building the technology, but making your clients realize them. And just for the context of viewers and audiences in this summit, Nishant's company earlier was called CRM Next, and it is now called Business Next. And there are multiple layers which kind of correlate to the same concepts that I just spoke about. And I would love Nishant to kind of narrate his journey of not just building, but pivoting and coming up with this Business Next stack, which is almost like synonymous to the AI CRM stack that we are talking about, especially in context of banking and financial services.
Thank you, Vikrant. Thank you for having me here. When we started CRM Next, our objective was very simple. We thought financial services were different. Almost anything that a customer needed would happen in a core, which is a processor at core. And therefore, as banks became universal, there were tons of cores, and therefore we became really the system through which you could deliver on your promise and the experience that everybody kept talking about. And as you earlier said, even though banks talk a lot about being customer centric, and I think it's been 2 decades we've been hearing that word, the quotas go down as products, and that kind of reinforces this whole product silo mentality. Probably what has happened is people are now more unified across channels. Was like omni-channel is now kind of a little more abused than it was earlier. And so really in 2016, we kind of came up with this whole what CRM should be next story. And really the idea was about the digital CRM. And that's led to the era of what we call as the digital bank. But when you're here today, and when you and I are talking today, 4 years ago, we pivoted our name and we made it Business Next, because it wasn't about those flows that you could, imagine the old vocabulary of CRM. It was a system of record. It had transactions, it had dashboards, workflows. And really all of that was how the thinking was. But I think 4 years ago, we took this massive bet that the future of financial institution is autonomous. So bank is nothing but an autonomous banking in making. And therefore business next became that. And I think the thinking vocabulary changed. As we said today we think in terms of the semantic systems, the knowledge graphs, the multi-agent orchestration that starts to take action, this whole autonomous flow. And honestly, the best UI is the conversational flow. So again, I think two different worlds, but everything that we learned from the first part of the world kind of seamlessly comes into this part of the world. And I think that's what, that's the best way to do, to kind of just describe what we are trying to do and the shift we've made.
Yeah, so this is very profound. You somewhere mentioned the point of digitalization wave, and as digital came into being in the earlier vocabulary, uh, uh, when you get into a bank or an insurer architecture, that digitalization wave will drove a whole lot of front office, or basically the front office systems or digital systems, which were kind of beginning the transaction for customers, whether in branches or call centers or super apps or any of these surface as omni-channel that you alluded to. But that investment of into those digital surfaces did not kind of keep pace with the linking of the middle office or residing into the product processor that you just said. That front, mid, back gap with AI is actually all of those fractures are coming to the surface. As we did a ServiceNow CX study and we spoke to banks customers, most of them, in fact, 48% plus, were not the delight range customers. They were little dissatisfied customers out of their financial institution. And if we double click on those conversations, we seem to be seeing this gap of front to mid or front mid back becoming like an execution. Customer wanted a task to be done, a new product to be added into portfolio, or certain things to be expedited in the lending or a policy issuance cycle. How do we actually make that front, mid, back into a system of execution rather than the earlier vocabulary of system of engagement being a CRM? And a lot of analysts and vendor gravity has actually made this conversation of CRM equal to sales, service, and marketing coming together. Honestly, for customers, it didn't seem to matter. They want to get the work done of all customer face requests, whether it's a new product request or an addition or progression. So could you please enumerate how do you see this whole system of engagement to a system of action coming to life with your vantage point?
Hey, once the industry kind of launched into the mobile era with mobile banking, obviously the next obvious point was how do we improve this experience? And I think the rise of digital, as we call it. So since 2015, there's been a lot of attempt to do digital, and at the core of that is being frictionless. A very good example I take is it easier for me to get another card from my bank than, let's say, an Amex kind of a story, right? Those are comparisons in mind on how quick and forward can this relationship be. In banking, you don't shop for new products because you got a better offer. There's a timeline to what you need in terms of financial needs, your lifetime events, if may. And at that point in time, you want to pick it up quickly, hopefully with a bank you trust, and solve for it. And the same thing happens with the insurance companies about trust, and trust takes a lot of time to compound and build. Unfortunately, what has happened is that in our focus of doing digital, of course, you can start a journey, but whether you can finish or not depends on the degree of digital alignment. And at some point of time, the board started measuring what percentage of my revenue came through digital, which they call as digital inversion. So suddenly now you had these beautiful looking journeys where people had spent, months obsessing about how good it looks, the UI UX workshops. But I think what they kind of forgot was that the customer experiencing their process more than the UI. So a lot of places you see, create ways to start a journey only to get like an ID to follow up. So you can apply for, let's say, insurance, but it may just take 5 days to get to the actual story. And of course, then the banks became smarter and they started to do different variations of product and stuff like that. But if you really just zoom back and look at it, there is still this massive disconnect between the front office and how you kind of operate. Now, we've been talking about zero operating models for quite some time now. We do believe, in 2015, we gave the industry the 3 zeros, zero TAT, zero rework, right? That kind of model. But the truth is we're still struggling as a bank or as a financial institution or as an insurance company. Because again, instead of thinking of it as a journey, we've thought of it as a channel. So you got like these journeys that smile at each channel but then have a very convoluted workflow in the back end. I think that unification, that reimagination is what kind of allows you to do a better degree of digital inversion. And I think what's happening with AI now is because AI can do things so seamlessly and fast. These fractures are kind of where really the chasms are being created. So unless you don't fundamentally rethink this architecture, this isn't a band-aid you can put and kind of move on. So I think somewhere down the line, the intentions of financial institutions have been right. Eventually, what you can't measure, you can't improve. So obviously, digital inversion was about the criticality of digital first revenue. However, there's huge scopes of improvement in how it kind of really is realized front to back from an experience delivery for a customer.
Awesome. I like the word digital inversion, the way you correlate and basically the drive to revenue. And since banks make a whole lot of their money through lending, we saw this in lending at a massive pace. We saw a whole lot of digital lending boom, and in different categories of lending for banks and NBFCs, whether it's consumer durable or auto or home loan. These are different engagement products. Some things get decided by a customer in 30 minutes when somebody's shopping for a white good. Some things maybe is pre-decided that I want to buy an XYZ car. And some things are long engagement cycle where these things become like an embedded decision of financing, but buying a house is a more involved subject for the family. While some of this came about, I think I'd like you to kind of dwell more in terms of lending, how this front to back execution piece is becoming an architectural nuance and not really just two separate systems of front office or middle office. It's actually one unified. And with AI, how you're kind of thinking through this, that it can define newer business models like banking as a service, etc., to come by. But I think most money being in where lending is, I think your point of view on how you're conceiving digital lending will be meaningful.
Yeah, actually, there's a joke in bankers that everybody can lend, who can collect is the winner, right? And that's really the truth about it, because banks at the core don't want non-performing assets. So, and also lending is really the core of their principle, because banks really manage risk, and that risk arbitration is their income. Okay, at least that is what in this part of the world banks still do. So I think what's really happening with banking is what's happening with lending, right? So lending today is becoming far more invisible, embedded, and really third-party operated. You still would be the provider of the lending workflow. But really the class of why we are lending has changed. In India, for example, Today, some of the largest uptake in uh, unsecured loan is for holidays and buying iPhones. Okay, now that you could have never thought of that coming from the conservative way we grew up, right? So really the banking products are also saying so it's no longer about uh, what loan product do I buy. It's more like what can I afford. So I mean that's kind of completely turned the whole matrix of how you offer lending upside down. I think that's really the first key takeaway, that it's really invisible. It's being used in ways that most products were not set up to think, and therefore at the very first story is the product abstraction. How do you build products for this new world? How do you kind of deliver that at a point that is seamless? Maybe a bank's name is not even visible. I mean, when you do a checkout of an Amazon cart and you break it into 5 EMIs, it doesn't matter who gives it to you as long as you agree to those terms. So therefore, it's far more invisible than we think today. And see, what's happening is that banks are therefore not only operating a full fleet lending system today, but they're also kind of trying to deliver it as a service that then third party can solve for it. And various countries, because we work across 4 or 5 continents, the plays are different, right? So if you look at Asia, there is also the pressure of financial inclusion that comes in. That brings you a very different kind of lending. And then there is the affluent lending, which is a very different draft of a lending, versus, there's a typical consumer lending, which is a completely different draft of lending. So again, that diversity then kind of tries to say, do I really need to own the whole thing? Of course, you need to have a UX layer that you own. But really, I mean, a lot of banks are now looking at it as a banking as a service or a lending as a service. And then really there are three critical parts that then reimagine. How we underwrite, and of course, AI is a large part of that today. Specifically, when you don't have straight ESs, everybody can lend somebody with great scores. The question is, what is your alternative underwriting mechanisms? And what we're seeing is that it used to be just lip service and some data points that would be considered in a specific flow. Now I think those are becoming more sophisticated mechanisms. I think the second part is the risk engine that you operate, right? And really the third is your compliance engine, because all of this has to be done with a good study in compliance. But I think at the end, what really matters is that you're building towards a frictionless, anytime, anywhere lending. I honestly believe that 70-80% of lending interfaces will no longer be controlled by banks. Okay. So if you take an example, again, coming back to a country like India, we've done this phenomenal job of delinking payments. UPI opened up. I mean, you can write an app and become a full service provider for payments, a bill pay, and all the hook products that used to be very expensive. India is now coming up with unified lending. So literally the whole application, the authority, the KYC is kind of rolled in and really kind of comes to the three engines I told you. Like, are you willing to underwrite this? What is the risk you take? And then the compliance that will go around it. So ironically today, more than lending being lending has become about collections. So I think that is what I'm running. It's a full spectrum war. But as I said, the old joke is true. Everybody can lend. The ones who collects back win. Does that make sense?
Awesome. Makes sense. And you kind of very nicely touched upon of how and why now this is becoming like banking as a service and embedded. Because as products are almost vanishing and products are being discovered on the glass of a e-commerce portal like Amazon or any other consumption mechanism for that matter. I'd like to wrap this as you deliver these architectures in both your offering as well as with customers. How's this differentiation of agentic versus autonomous in realization falling in place? We earlier spoke about stuff to build agents, making them work with humans, and then AI that thinks as an infrastructure, but workflows that act, as we say. How do you think is the subtle difference, and what leaders need to really in FSI industry understand that nuance of agentic versus autonomous banking?
Actually, give me a minute to frame this better. I think the board has been overcooked with Agentic for the last 2 years. So it's one of those revolution which wasn't a push, but was a pull from the board. So almost everybody kind of has evolved from the point where they couldn't make out a difference between a chat bot and an agent. Okay. Also, I think everybody's done few agent stacks. They have a disparate way of kind of creating agents within in-house. And I think the problem, as you correctly said, is understanding the difference between agentic and autonomous, right? And I think if you understand that, then you kind of really understand what are you building for, right? So agentic, think of it as more like a AI that helps users. And then typically they'll complete a job, they'll complement a guy or something like that. But think of autonomous being far deeper. It is trying to orchestrate an impact. Okay. And in that case, human may be in control. I mean, human will be in control. Okay. So I think the first change is this human in the loop to human in control between the two surfaces. I think agentic is very kind of human initiated. Some of those flows will work in the background, but there'll always be certain elements where a human in loop will be coming in, specifically with regard to banking, because remember, banking has this massive compliance problem as well. But really, it's about task automation at this point of time. Okay. Let's say an agent was to start to give you a consent on loan. What the regulator wants to make sure is you capture the whole school of the chain of thought plus everything that happened within. Because if somebody wrote a bad load which was mischievous, the regulator would have come and caught that bank officer. But then how do you catch like an agent, right? So that's really the drift from being an agent to an autonomous. And I think what autonomous is trying to do is trying to create an outcome. So you have all these agents which are kind of orchestrated in a framework with an institutional intelligence that can cross-reference each other. And really, the idea is in this case, the human is in control, not necessarily initiating it and doing it, right? So as you create better degree of autonomy, the autonomous banking kind of drifts that away. So I think that's how we think about it. Fundamentally, how you build the two technology is very different. One is about getting a agentic harness and kind of doing agentic workflow. You can do it in 15 minutes, but if you really want to not do yourself a disservice, you want to do it with somebody who can help you kind of control that, watch that, observe that. So again, a much better harness with a lot more trust. So trust becomes an issue. But when you think of autonomous, it's far more rigorous and you really have to build component by component, right? So you really have to start by thinking of your semantic layer. Then you think of your knowledge graphs, how your customers, how your products, everything kind of live together. Then you come to the whole multi-agent orchestration story. And remember, as you've seen to the future, every system will have an agent. So sometimes these flows will have multiple agents coming together to do work and some master agent watching how faithfully they're doing this, right? And then you, of course, have the workflow fabric because, you can do agents are okay, but like you're really talking about banks owning more than 700-800 systems. Completing them would mean those workflows understand the data, the context, the concept, and honestly how to kind of do that, those last mile STPs. And all of this has to be put in terms of compliance and security and observability. So that's really what agentic and autonomous is. Agentic is like the getting started of autonomous, but autonomous is far more sophisticated, owning outcomes.
Oh, great. Great that you alluded to that the future of banking is really autonomous. And it's so nicely put that it is actually to deliver an outcome and also to amplify humans, human in control, to deliver an outcome. And future of banking is really an autonomous. And autonomous is an architecture which should work on a autonomous CRM kind of a layer. And technologies like our AI control tower to make sure regulatory, systemic, security, governance, guardrails are in practice every time we orchestrate some of these contexts for a futuristic
And
organization.
Vikrant, if I may add, because you brought up the control tower. See, that's one of the things that a lot of CIOs miss. Imagine you have 500 people doing their own AI. How do you set up guardrails? How do you monitor this? That's why kind of having a central control tower is important. And if you're using a control tower to observe your organization today, seems to me that has a center of gravity to kind of, pull towards these kind of demands also. But again, the last part that I talked about in terms of governance and all are really the critical piece.
Yeah, thank you so much for elaborating this for our viewers, Nishant. Lovely conversation. And I'll leave this by saying the future of banking truly seem autonomous, need to run on an autonomous CRM. It's Agentic is a beginning, autonomous is the outcome, with human in control and to deliver that outcome. Thank you so much.